You know, I've often said that the market is never wrong, opinions are. And if you've been following along since the previous video on the rule 99% of traders fail, you'll understand why today's talk matters more than ever. Because today, we're diving into the real reasons traders lose, not because the market beats them, but because they beat themselves. The mistakes traders make aren't written in their charts, they're written in their habits, their fears, and their impatience. Now, let me tell you something straight. The average trader doesn't lose because he doesn't have a system. He loses because he doesn't have the discipline to follow one. I've seen men with perfect setups ruin themselves by overtrading, and I've seen others make fortunes simply by sitting tight on a winning position. Do you know which group you belong to? If you're not sure, that's your first mistake. Every trader wants to make money, but wanting isn't enough. The market doesn't reward desire, it rewards understanding. And that's where most traders fall apart. They mistake excitement for opportunity. They see a move and think they have to act. The ticker starts to dance, and suddenly, they forget every rule they ever made for themselves. Tell me, have you ever broken your own rule just because the price moved faster than your patience? I used to do it too. When I first started trading, I'd jump in and out of positions like a man possessed. The market would tick up a few points, and I'd think I'd better take my profit before it disappears. Then it would go up another 10 points, and I'd curse myself for selling too soon. Next time, I'd hold too long, only to watch my gains vanish. It took me years to learn that the big money isn't made in the buying or the selling, it's made in the waiting. But waiting requires one thing most traders don't have control over themselves. You see, the market is a mirror. It shows you exactly who you are. If you're greedy, it will expose it. If you're fearful, it will punish it. And if you're careless, it will make sure you pay for it. A trader's worst enemy isn't the market, it's his own emotion. Have you ever noticed how the hardest time to stay disciplined is right after a big win or a big loss? That's when traders make their costliest mistakes. After a win, they feel invincible. They throw caution aside, trade bigger, take chances, and think the market owes them another profit. After a loss, they trade to get even, chasing their money like a gambler doubling down. Both paths lead to ruin. You can't fight the market with emotion. You must trade with reason, not hope. And hope, that's the most expensive emotion in the market. Traders hope a losing position will turn around. They hope the chart is lying. They hope the market will give them another chance. But hope has no place on a price chart. The tape doesn't care about your hopes or fears. It only reflects supply and demand. When a stock breaks your level, it's talking to you. The question is, are you listening? In that last video, we talked about why 99% of traders fail because they refuse to accept that the market doesn't owe them anything. Today's lesson ties directly to that truth. Mistakes happen when traders try to force the market to do what they want, instead of understanding what the market is doing. You don't trade the market you trade the one in front of you. Let me ask you something. How many times have you looked at a losing position and said, "It'll come back"? That's the lie every trader tells himself before the market teaches him the truth. The market doesn't come back for anyone. When you're wrong, the only thing that saves you is recognizing it early and acting on it. Cutting losses quickly isn't just a rule, it's survival. Most traders don't fail because they lack knowledge. They fail because they lack self-control. They read books, follow charts, listen to tips, but when it's time to act, they hesitate or overreact. They let hope and fear take turns steering the wheel. That's why the market takes their money. The market is a patient teacher, but a ruthless one. A trader has to learn to think independently. Don't listen to the crowd. The crowd buys when prices are high because they're afraid of missing out. The crowd sells when prices are low because they're afraid of losing more. But a real trader does the opposite. You buy when it's right, not when it feels good. You sell when your rules tell you to, not when your emotions beg you to stay in. How often have you let fear of missing out push you into a trade you knew wasn't right? Trading isn't about predicting, it's about reacting correctly. The chart tells the story. Your job is to interpret it without bias. When a stock moves against you, it's information. When it moves with you, it's confirmation. Every tick is data. But too many traders look at the tape and see only money. They forget it's a record of psychology. If you can read the emotions behind the moves, you'll understand what most never see. And remember this, there's a time to trade and a time to wait. Most traders can't stand the waiting. They feel that if they're not in the market, they're missing out. But sometimes, the best trade is no trade at all. I made my biggest profits by sitting tight while others were chasing every uptick. Do you have the patience to sit on your hands when there's nothing to do? Because that's where most of your edge lies. A trader must protect his capital the way a soldier protects his ammunition. Lose your capital, and you lose your freedom to act when opportunity finally comes. That's why careless trading is so dangerous. It's not just about the money you lose. It's about the chances you'll never get to take later. And I'll tell you this, mistakes will happen, even to the best of us. The goal isn't to avoid them entirely, it's to make sure they don't destroy you. Every mistake you make should teach you something. Every loss should buy you a bit of wisdom. But the tragedy is, most traders never learn. They repeat the same blunders over and over, blaming the market instead of their own reflection. So when you find yourself staring at the screen, tempted to break your rule, ask yourself who's really in control here, me or my emotions. Because in trading, that's the only question that ever truly matters. Hope is not a trading strategy, it's a trap. I've seen more men lose their fortunes because they refused to admit they were wrong than for any other reason. They sit there, watching the market turn against them, whispering to themselves it'll come back. But it never does, not in the way they imagine. Hope is a dangerous companion in this game. It feels comforting when the chart turns red, but it's the same comfort that keeps a man sitting on a sinking ship. Let me tell you something most traders never want to hear. The market doesn't care about what you want. It doesn't care that you need a position to bounce back so you can feel good again. It doesn't care that you've been patient or that you deserve a reversal. The market only reflects what's happening between buyers and sellers, nothing more, nothing less. When you trade on hope, you're not reading the tape, you're reading your own emotions, and emotions have no place in price action. Every trader has done it. You take a position, it dips, and instead of cutting it, you tell yourself it's just a pullback. You find reasons to justify holding on. You draw lines on your chart to make the pain look logical. You tell yourself stories like, it's just consolidating, or this is the smart money shaking out the weak hands. You start searching for opinions that agree with you, ignoring the ones that don't. Have you ever caught yourself doing that, looking for comfort instead of clarity? That's hope at work. Hope clouds reason. It's a drug that dulls the sting of loss, but it also blinds you to reality. When you hope instead of act, you give away your control. The market doesn't punish traders for losing, it punishes them for staying wrong. There's a difference between being wrong and staying wrong. One is inevitable, the other is a choice. When I used to trade on the bucket shop floors, I saw it happen daily. A trader would buy a stock, it would drop a few points, and instead of selling, he'd double down. He'd say, it's too low now, it can't go much lower. Then it would fall again. Soon, he wasn't trading anymore, he was praying. He'd stare at the ticker, not seeing numbers but begging for mercy. That's not trading, that's hoping. And the market shows no mercy to hope. Hope seduces you because it feels like optimism. It makes you believe you're being strong by holding on. But in the market, strength doesn't mean stubbornness, it means flexibility. The strong trader isn't the one who clings to his opinion, it's the one who changes it when the facts change. The tape doesn't lie, but hope makes you deaf to what it's saying. You see, when a trade turns against you, that's the market giving you information. It's not personal, it's communication. The loss is a signal that your rid was off, that conditions have changed, or that your timing was wrong. A professional trader listens to that message. He takes the small loss and steps aside. An amateur ignores it, waiting for the market to come back so he can feel right again. But markets don't turn to save your ego, they turn when supply and demand shift. The tragedy is that hope often shows up right when discipline is most needed. You can feel it, your stomach tightens, your palms sweat, and you start telling yourself stories. It's oversold. The fundamentals are strong. It's just manipulation. You build a case to protect your pride instead of your capital. Tell me honestly, how many times have you stayed in a losing position just because you couldn't stand to admit you were wrong? That's what hope does. It ties your identity to a trade. You stop thinking like a speculator and start thinking like a believer. You begin to worship the position. But the market isn't a religion, it's arithmetic. It rewards precision and punishes emotion. You can't bargain with it. You can't persuade it. The only language the market speaks is price action. Hope also keeps traders from following their rules. They have stop losses written down, but when the moment comes, they hesitate. I'll give it a little more room, they say. That little room becomes a canyon. They forget that a stop loss isn't a suggestion, it's a defense line. Once it's broken, the reason for the trade no longer exists. But hope whispers, just wait a little longer. And in that whisper, fortunes disappear. A trader's job isn't to predict every move, it's to manage risk. The moment you start hoping, you've lost control of that risk. You're no longer trading probabilities, you're gambling on emotion. The great irony is that hope feels safer than action. Selling a loser feels painful, but it's actually the only move that protects you. Hope feels safe because it delays the pain, but the longer you delay it, the worse it gets. Think of it this way, the market rewards those who act on facts, not feelings. When a trade proves you wrong, the fact is on the screen. The tape is saying, you missed. There's no shame in that. Every trader misses. The shame is in pretending otherwise. The longer you hold on to hope, the farther you drift from reason. In my years of trading, I've learned that the best traders don't hope, they prepare. They define their risk before they act. They accept that being wrong is part of the game. When the market turns, they don't beg it to change back, they adapt. That's the difference between the professional and the amateur. One manages uncertainty, the other tries to wish it away. Ask yourself this: are you managing your trades, or are your trades managing you? When you find yourself staring at a red position, do you analyze the chart, or do you pray for a miracle? Because the moment you start hoping, you've stopped trading. Discipline beats prediction every single time. Most traders don't believe that at first. They think success in the market comes from being able to forecast the next big move, from catching the perfect entry, from calling the top or the bottom before anyone else sees it. But trading isn't about being right, it's about being consistent. The man who survives in this business isn't the one who guesses the best, he's the one who obeys his own rules when the market tries to make him break them. When I first started trading, I thought I could outsmart the market. I studied every chart, memorized every pattern, read every headline. I believed that if I just understood enough, I could predict what was coming next. I'd take a position and feel proud when the market moved my way, and when it didn't, I'd say I was just early. But the market has a way of humbling you. It doesn't reward intelligence, it rewards control. Tell me, have you ever been right about the direction, but wrong about your timing, and still lost money? That's the market's way of reminding you that discipline, not prediction, keeps you alive. You see, discipline isn't glamorous. It's not exciting like calling a reversal before it happens. It doesn't make for dramatic stories at dinner parties. But it's what separates a professional from a gambler. The disciplined trader doesn't care about being right, he cares about doing the right thing. He sticks to his stop losses. He sizes his positions correctly. He waits for his setups. He sits out when the market is unclear. That's not luck, that's self-control. The problem is, most traders can't sit still. They crave action. They think doing something, anything, is progress. They jump into trades because they can't bear the feeling of missing out. But trading is a waiting game, not a chasing game. The discipline to wait for the right moment is what builds fortunes. The lack of it destroys them. Ask yourself, how many times have you entered a trade just because you were bored? That's not trading. That's restlessness pretending to be strategy. The truth is, the market doesn't pay you for what you think it pays you for what you do. You can predict a move perfectly, but if you don't execute properly, you gain nothing. And you can be wrong in your prediction, but still make money if your discipline keeps your losses small. That's the paradox that most traders never learn. They want to be prophets, not professionals. But the market doesn't need prophets. It needs disciplined participants who respect its uncertainty. Discipline is the art of doing what you said you'd do long after the excitement of making the plan has faded. It's easy to make trading rules when the market is closed. It's a different story when you're watching a price tick against you. Suddenly, your rules don't feel so comfortable. You start thinking, maybe I'll move my stop a little lower. Or maybe this time I'll let it breathe. That's how undisciplined habits start. You break one small rule, then another, and before long, you're trading on emotion again. Have you ever watched yourself justify breaking a rule in real time, even while knowing it was wrong? That's the moment when discipline is tested. The most dangerous traders are the ones who are occasionally rewarded for bad behavior. They move a stop, and the market reverses in their favor. They average down and catch a bounce. They get lucky, and luck teaches them the wrong lesson. They start believing their instincts are superior to their system. But sooner or later, the market takes it all back with interest. Discipline is what protects you from that illusion of control. The disciplined trader understands that he can't control the market, only his reaction to it. He knows that no prediction is certain, no setup guaranteed, so he builds a framework rules for entry, exit, and risk. And then he follows them with religious consistency. It's not that he's emotionless, it's that he refuses to let emotion make his decisions. That's what makes him survive when others are swept away by greed or fear. In that earlier video on the rule 99% of traders fail, we talked about why most traders lose. They can't follow their own systems. That ties directly to discipline. You can have the best method in the world, but if you lack the discipline to stick with it through drawdowns and false starts, it won't save you. Trading systems don't fail, traders do, because they can't stand the discomfort of patience and uncertainty. The disciplined trader also knows that sitting on his hands is sometimes the most profitable move he can make. There are periods when the market is noisy, when price action is choppy, when every setup looks tempting but none are clear. The undisciplined trader jumps in, chasing every flicker. The disciplined one waits. He protects his capital, knowing that opportunity will return. Discipline isn't just about what you do, it's about what you don't do. One of the hardest lessons to learn is that missing a trade is better than taking a bad one. The market will always be there tomorrow. Your capital might not. Every undisciplined trade chips away at your confidence, your balance, and your ability to act rationally. Every disciplined decision, even if it costs you a small profit, strengthens your foundation. You start trusting yourself more, and that trust becomes your edge. Discipline also means accepting small losses as part of the business. Most traders can't do that. They let ego get in the way. They hate being wrong so much that they hold on, hoping to prove themselves right. But the market doesn't care about your pride. A small loss today is tuition for a lesson. An undisciplined hold turns the tuition into bankruptcy. The disciplined trader knows that taking a loss isn't failure, it's a transaction cost. Ask yourself this: would you rather be right, or would you rather make money? Because those two aren't the same thing. The trader who chases the need to be right will keep predicting and losing. The one who chases consistency through discipline will build wealth quietly. The market doesn't reward brilliance, it rewards endurance. Every great trader I've known had one thing in common: they treated discipline as sacred. They didn't care about being perfect. They cared about being prepared. They followed their process whether they felt confident or doubtful. Because they knew the true success in trading doesn't come from seeing the future. It comes from controlling yourself in the present. The market mirrors your psychology. Learn to read yourself first. Every trader wants to read charts, study candles, and memorize indicators, but few ever stop to study the person behind the screen. That's the real chart that matters. You can have the best system in the world, but if your emotions are out of control, that system won't save you. The market is a perfect reflection of what's going on inside you. It exposes fear, greed, impatience, and ego with brutal honesty. It doesn't lie, and it doesn't forgive. Most traders think the market is unpredictable because they can't predict themselves. Their reactions change every day depending on mood, confidence, or what they saw on the news that morning. One day they're cautious, the next they're reckless. But the tape doesn't change for them, it's the same. What changes is how they interpret it. Tell me, have you ever looked at the same chart twice and seen something completely different each time? That's not the chart changing, that's your mind shifting. The market is a mirror that shows you your true temperament. If you're impatient, it will make you jump into trades too soon. If you're greedy, it will lure you into over-leveraging. If you're fearful, it will push you out of winners before they mature. And if you're arrogant, it will humble you faster than you can blink. The problem isn't that the market is unfair, it's that most traders are unprepared to face themselves. Trading doesn't just test your strategy, it tests your character. I learned that lesson the hard way. In my early days, I thought knowledge alone was power. I memorized patterns, studied price behavior, and believed that mastery of the market was about analysis. But when my trades started moving against me, all that analysis flew out the window. Suddenly, I wasn't following logic anymore, I was following emotion. I'd make impulsive decisions, trying to make it back, and each time, I'd dig the hole deeper. It took me years to realize I wasn't fighting the market, I was fighting myself. Have you ever been your own worst enemy in a trade? That's the battle every real trader faces. Most people enter the market looking for profits, but they end up finding themselves. You can't hide who you are when money is on the line. The ticker reveals it all. The moment you risk capital, you reveal your discipline, your patience, your courage, and your weaknesses. That's why trading is so difficult. It's not just numbers and charts. It's a psychological confrontation. And if you don't understand your own tendencies, the market will exploit them every time. When a trader doesn't know himself, he reacts instead of responds. He chases candles, listens to rumors, jumps from system to system, and never realizes that the problem isn't out there, it's in here. The undisciplined mind can't execute a disciplined strategy. The chart is neutral, but the trader's interpretation is emotional. That's why two traders can look at the same setup, and one will see opportunity while the other sees danger. It's not about the setup, it's about the state of mind. In that earlier video on the rule 99% of traders fail, we talked about how most traders lose because they never develop the right mindset. That connects directly here. The market exposes the inner flaws that cause those failures. Fear makes traders exit early. Greed makes them hold too long. Overconfidence blinds them to risk. Impatience drives them into bad entries. If you can't read your own psychology, you'll never understand why you make the same mistakes again and again. Every emotion you feel in trading, fear, greed, anxiety, frustration, shows up in your chart behavior. When you panic, you sell bottoms. When you get greedy, you buy tops. The chart isn't punishing you, it's reflecting your psychology in real time. The trick is to stop blaming the market and start studying your reactions. When you understand what triggers your emotional decisions, you can control them. And when you can control them, you start trading from clarity instead of chaos. One of the greatest realizations a trader can have is that price isn't the enemy, impulse is. The market moves how it wants, and you can't control that. But you can control how you respond to it. That's where the power is. A calm trader can see the same volatility that drives others crazy and treat it as information. A reactive trader sees that same volatility as a threat and makes costly decisions. The difference isn't knowledge, it's emotional awareness. A disciplined mindset doesn't mean being emotionless. It means recognizing emotions for what they are, signals, not instructions. When fear shows up, it's telling you something about your risk tolerance. When greed shows up, it's showing you a lack of patience. The best traders use those emotions as feedback, not fuel. They observe them without letting them dictate action. Have you ever paused mid-trade and asked yourself, am I following my plan or my emotions? That one question can save you a fortune. It's also important to remember that the market rewards emotional balance. If you're too confident, you'll ignore danger. If you're too fearful, you'll ignore opportunity. You have to walk the line between the two: rational, observant, and flexible. The trader who can stay emotionally neutral while everyone else panics or celebrates has the advantage. Because while the crowd trades feelings, he trades facts. Self-awareness is the foundation of consistency. You can't manage what you don't understand. If you don't know your own weaknesses, you'll never design a system that protects you from them. That's why the best traders spend as much time studying themselves as they do studying charts. They know their triggers. They know when they're tired, when they're overconfident, when they're forcing trades. They treat trading like a mirror. They read their own reflection before reacting to the tape. The market, in the end, is a psychological battleground. The price is just the scoreboard. Every tick tests your patience, every move tests your confidence, and every loss tests your discipline. The trader who learns to master his mind has already mastered half the game. Because the chart doesn't defeat you, your reactions to it do. The sooner you learn to read yourself with the same precision you read a price chart, the sooner you'll understand what the market's been trying to teach you all along. Every mistake is tuition paid to the market. Learn the lesson. Don't repeat it. That's something most traders never truly understand until they've lost enough to feel it. Every time you take a loss, the market is teaching you something. It's showing you where you were careless, impatient, greedy, or afraid. The problem is, most traders pay the tuition but skip the class. They lose money, curse their luck, and move on without understanding what went wrong. That's why they keep making the same mistakes over and over, never realizing that the market is the most expensive teacher in the world, and the most honest one. I've said before that the market punishes arrogance and rewards humility. A trader who thinks he knows it all doesn't last long. You can't bluff the tape. Every tick exposes the truth. When you lose, it's not because the market is against you, it's because you misread something. Maybe your timing was off. Maybe your position size was too big. Maybe your emotions got in the way. But every loss has a message hidden inside it. Tell me, how many times have you lost on a trade and blamed the market, when deep down you knew the mistake was yours? I remember my early days when I was still learning the ropes. I'd make a bad trade, lose money, and swear I'd never do it again. Then, a few weeks later, I'd find myself in the same position, making the same mistake, only this time with more conviction. The loss would sting again, and I'd tell myself the same thing. Next time I'll be smarter, but being smarter isn't enough if you don't change your habits. The market doesn't reward memory, it rewards discipline. You can't just remember your mistakes, you have to rewire your behavior so you don't repeat them. Every trader has a record of their failures written in their charts. It's there in the impulsive entries, the late exits, the moved stop losses, and the ignored signals. Each one of those was a small tuition payment. The question is, what did you learn from it? Most traders don't even take notes. They treat trading like a series of random events, not realizing that each decision leaves a pattern behind. If you don't analyze your own patterns, how can you ever improve? Losses hurt because they challenge your ego. You want to believe you're right. You want to believe your analysis is perfect. But the market doesn't care about your pride, it only cares about precision. Every time you lose, you have two choices: protect your ego or protect your future. The traders who survive choose the latter. They treat losses as lessons. They dissect them. They look at what they missed, what they ignored, and what they assumed. That's how they grow. There's a saying I've always believed in: the market will keep teaching you the same lesson until you learn it. You'll keep overtrading until you finally understand why patience pays. You'll keep holding losers until you truly feel the pain of ignoring your stop. You'll keep chasing trades until you've exhausted yourself enough to see that stillness is power. The market doesn't move on until you do. It's patient like that. Have you ever noticed how the same kind of mistake keeps showing up in your trading journal? That's not coincidence, that's your recurring lesson. In that earlier talk about the rule 99% of traders fail, we spoke about how most traders lose because they refuse to learn from experience. They treat every setback as bad luck instead of feedback. That's why only a handful ever rise above the crowd. The winners are the ones who treat each loss as an education. They know the market is a teacher that charges high tuition, but delivers lessons worth fortunes. They don't resent the pain, they study it. When I take a loss, I don't ask, why did the market do this? I ask, why did I react that way? That question reveals more than any chart ever could. Maybe I entered too early because I was afraid of missing out. Maybe I ignored a signal because I wanted to believe I was right. Maybe I took too large a position because I was overconfident after a winning streak. Whatever the reason, the lesson is always about behavior, not price. The market simply reflects the outcome of that behavior.